As many of you know, I love investing in dividend stocks. It's not all I invest in, but who doesn't love passive income? And better yet, who doesn't love passive income every single month? And in today's video, it's going to be kind of fun. We're going to go through 12 stocks that'll have you earning a dividend every single month. I will start with a company that pays a dividend in January, and then move to another company that pays in February. And we will go through all 12 months, giving you 12 different stocks, having you earning a dividend check every single month. But before we unveil these 12 stocks, do me a huge favor. Show your appreciation by clicking that like button down below. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Rouston here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's get back to this video. And again, I think this is going to be a fun one. Let's begin by commenting down below. Let me know how many months of the year do you receive dividend income? Do you receive every single month? You would write 12. Do you only receive 5 months? You would write 5, so on and so forth. So with that though, let's begin with our first dividend stock. This company pays their dividend, one of them, at least in the month of January. And the January dividend stock is going to be Walmart. Stock ticker WMT. Walmart is a staple found in many portfolios, whether we're talking about dividend investors or not. Plain and simple, the company knows how to execute. Walmart operates out of the consumer staples sector. The company has a market cap of $612 billion, and over the past 12 months, shares of Walmart are up 44%. The great thing about Walmart is the fact that they have found ways to compete with the likes of Amazon. And another great thing about owning Walmart within your portfolio is the company can perform well regardless of the economic backdrop. If we're in a recession, many folks go to Walmart. If things are booming, people still go to Walmart and the company can still perform quite well. In terms of the dividend, the company pays a dividend of 83 cents per share. They have a dividend yield of 1.1% and a 5-year dividend growth rate of 3%. However, the company is a newly crowned dividend king with 50 plus consecutive years of dividend growth. The fact of the matter is, many people don't invest in Walmart for the dividend at all. The dividend growth is slow and the yield isn't all that big, but you're getting something in return. As we noted in the beginning, Walmart pays their dividend, at least one of them, during the month of January, but they also pay during the months of April, May, and September. So it's not more of your traditional quarterly paying dividend stock. It's a little bit more of a weird schedule. Now let's take a look at our dividend calendar. And we're going to be filling this out throughout the entirety of this video. So we're going to start by placing Walmart as our January stock. And that leads us to our February dividend stock, which is Abbvie, stock ticker ABBV. And if you followed me for any amount of time, then you know I love Abbvie. It is a top position within my portfolio. The company has evolved greatly from the days back when it was really a one-trick pony with Humira accounting for roughly 70% of company revenues to now being much more diversified and in a much better position moving forward. The company operates out of the healthcare sector with a market cap of $349 billion. And over the past 12 months, shares of Abbvie have climbed roughly 35%. Abbvie is a stock I love because it has a lot to offer, and I often refer to them as the investor's trifecta. It offers great growth potential, a solid dividend yield, and over the years, strong dividend growth. And in addition, the company operates with free cash flow margins in excess of 40%, something I love to see as an investor. In terms of the dividend, the company pays a dividend of $6.20 per share, which equates to a dividend yield of 3.1% and 5-year dividend growth rate of 8%. Abbvie management has increased the dividend for 10 consecutive years. Pretty much every year, they have been their own public company. Let's now add Abbvie to our dividend calculator and also note that the stock pays the dividend during the months of February, May, August, and November, a traditional every quarter payout. And that leads us to our March dividend stock, which is going to be Broadcom, stock ticker GO. Broadcom has thrived in this AI boom. And when we talk about AI, we're usually talking about stocks with very high multiples. Broadcom is looked at as a value AI play, one that's going to give you great dividend growth. Broadcom operates out of the technology sector as a semiconductor company. They have a market cap of $743 billion, and over the past 12 months, shares are up 85%. But if we zoom out even further, over the past 5 years, shares have climbed 475%. Free cash flow is important for any company, dividend paying or not, and Broadcom has seen their free cash flow continue to grow over the years. Looking at this chart, you can see the company has taken their free cash flow to nearly $18.5 billion, which can help fund that growing dividend. Speaking of the dividend, the company pays an annual dividend per share of $2.10, which equates to a dividend yield of 1.3%. Pretty staggering considering just a few years back, that dividend was over a 4% yield. The company has a 5-year dividend growth rate of 16% and 13 consecutive years of dividend growth. Let's now add Broadcom to that dividend calculator for the month of March and note that they pay their dividend in March, as well as June, September, and December, a very traditional quarterly paying dividend stock. And that leads us to our April dividend stock, which is Altria Group, stock ticker MO. Now, Altria is not going to offer much in terms of growth or even dividend growth, but what they do offer is an extremely high yield. A lot of income investors love to invest in Altria Group. It can be found in many high-yield ETFs. Altria operates out of the consumer staples sector, and they have a market cap of $90 billion. Over the past 12 months, shares are up 20%, and they have really found some momentum here in late 2024, with shares up 30% year to date. Altria is another company that continues to generate large amounts of free cash flow. Although they're dealing with declines in volume, the company has very strong pricing power. Let's take a look at that high yield dividend, where we can see that the company has an annual dividend per share of $4.08, which equates to a dividend yield nearing 8%. And they have a 5-year dividend growth rate of 4%. So you get a high yield, but very little in terms of dividend growth. But they consistently grow this dividend, as they are a dividend king with 54 consecutive years and counting of dividend growth. Let's now add Altria to our dividend calculator, as they pay their dividend in January, April, July, and October. And that leads us to our May dividend stock, which is Apple, stock ticker AAPL. This is another staple in many portfolios. Although they don't offer the growth that they once did, that could buck the trend here with this upcoming AI supercycle that many are talking about. Apple obviously operates in the technology sector as one of the largest companies on the market, with a near $3.5 trillion market cap. Over the past 12 months, shares of Apple are up 26%. Again, the company may not offer the growth that it once did, but they're finding ways to become more efficient. And as services revenues grow and becomes a bigger piece of the overall pie, that is high margin revenues, which maybe revenues aren't going to increase all that much moving forward. But that bottom line, EBITDA, operating income, free cash flow, is going to continue to expand as companies become more and more efficient. Service revenue growth is going to do just that. In terms of the dividend, Apple pays a dividend per share of $1 even, which yields a very low dividend yield of just 0.4%. Again, many people don't invest in Apple for its dividend. They do have a 5-year dividend growth rate of 5.5%, and they have grown the dividend for 10 consecutive years and counting. Now, if we add Apple to our dividend calendar for the month of May, and I must also note that the stock pays a dividend during the months of February, May, as we just noted, August, as well as November. And that leads us to our June dividend stock, which is United Health Group, stock ticker UNH. This is another unique company in the fact that they offer a solid dividend, but very strong dividend growth. And it also happens to be the largest weighting within the Dow Jones Industrial Average. United Health operates out of the healthcare sector. They have a market cap of $542 billion, and over the past 12 months, shares are up 20%. A few months back, the company got hit quite hard. There were reports of increasing costs, and at the same time, pretty much in the same week, the company got hit with a cyber attack, which had the stock selling off dramatically. Since those lows back in April, shares have rebounded more than 30%. Now let's take a look at the dividend, where we can see the company pays an annual dividend of $8.40 per share, which equates to a dividend yield of 1.4%, but very strong dividend growth, as the company has a 5-year dividend growth rate of 15% and 14 consecutive years of dividend growth. Now, if we add United Health to our dividend calculator during the month of June, we are starting to see this fill out. And it must also note that United Health pays their dividend during the months of March, June, September, and December. Let's continue on with the healthcare theme here for our July dividend stock, which is going to be Merck, stock ticker MRK. Merck is one of the best and largest pharmaceutical companies on the market today, and it's one of two stocks, them along with Broadcom, that I was really sad to see get pulled from the great SCHD dividend ETF. Merck operates out of the healthcare sector, as I mentioned, and they have a market cap of $295 billion. And over the past 12 months, shares are up 7%. That performance was actually much higher leading into their earnings report, which they recently reported that beat analyst expectations. However, the forward guidance came in quite light. And I often say it with people that I work with in my 6-week Investing Accelerator course that investing is less about what you did for me and more about what you're going to do for me. And if you're ever interested in working with me one-on-one through my 6-week Investing Accelerator course, then consider signing up for a free 15-minute information session. I would love to chat with you more about the program. Check out the link down in the description below. So back to Merck and talking about that share price drop that we've seen. In terms of valuation, shares are really starting to look quite intriguing. And going now from valuation, let's go check out the dividend, where you can see here the company pays an annual dividend of $3.08 per share. They pay a dividend yield of 2.6%, and they have a 5-year dividend growth rate of 8%. Merck management has increased the dividend for 13 consecutive years and counting. So with that, let's add Merck to our dividend calculator for the month of July. And I must also note the company pays its dividend during the months of January, April, July, as we just saw, as well as October. And that leads us to our August dividend stock, which is going to be Starbucks, stock ticker SBUX. This is another company that has been a fan favorite amongst dividend growth investors. However, there hasn't been many fan favorites for the past few years, as the company has pretty much done nothing. However, in recent weeks, they have done something. They replaced their CEO with one of the best restaurant CEOs that you could find. And I'll talk more about that here in a second. In terms of Starbucks, they operate out of the consumer discretionary sector. They have a market cap of $108 billion, and over the past 12 months, they are pretty much even on the year. But we are barely even, I should say. And we wouldn't be even at all had it not been for the company hiring their new CEO, which is Brian Niccol, coming over from Chipotle. The stock bounced more than 20%. So with that 20%, which is the best day Starbucks has ever seen in the stock market, that got us back to even over the past 12 months. But I believe that Brian Niccol is going to be able, he is the perfect person to turn this company around. But it's not going to be a quick turnaround. The company is very exposed to the likes of China, which has been a struggling market, but they're continuing their expansion plans all across the globe. He's going to turn it around, but we got to be patient. When it comes to the dividend, the company pays an annual dividend of $2.28 per share, which equates to a dividend yield of 2.4% and a 5-year dividend growth rate of roughly 10%. Starbucks has increased their dividend for 13 consecutive years. And as we saw, Starbucks pays their dividend in August, so we're going to add that to the monthly calendar here. But they also pay during the months of February, May, and November. And now for our September dividend stock, which is going to be the Home Depot, stock ticker HD. This is a company that has really struggled in terms of financial performance. However, the stock price is actually held in there. The Home Depot operates out of the consumer discretionary sector. They have a market cap of $372 billion. And over the past 12 months, shares of Home Depot are up roughly 15%. So what's been going on with the Home Depot? Well, they've been going through a bit of a roller coaster in terms of economics. When the pandemic hit, we had many workers that were forced inside their homes, working from home. many of them still working from home today. But a lot of home improvement projects went through a big home improvement boom. Well, now a few years out of the pandemic, a lot of that has dried up, along with higher interest rates and a weakening consumer. What has this all led to? Negative revenue growth for the company, something they haven't reported in a number of years. And it doesn't look like it's going to get that much better anytime soon. But this is another fantastic company, very efficient company that will eventually turn things around as interest rates eventually come down. In terms of the dividend, HD has long been known as a strong dividend compounder. They pay an annual dividend of $9 flat, which equates to a dividend yield of 2.4%. They have a 5-year dividend growth rate of 13%, and they've been increasing their dividend for 14 consecutive years. Adding Home Depot to our dividend calendar for the month of September, and let's also note they pay a dividend during the months of March, June, September, and December. And now for our October dividend stock, which is going to be the Coca-Cola Company, stock ticker KO. This is a Buffett favorite, a stock he started buying back in 1988, and over a 12-month time span amassed more than 20 million shares. The company operates out of the consumer staples sector. They have a market cap of $305 billion, making them the largest beverage company in the world. And over the past 12 months, shares of KO are up 17%. And as you can see, the company has been on quite the run, considering shares fell to $50 per share in the fall of 2023. And all that had to do with the growing popularity of those GLP weight loss drugs. Back in the fall of 2023, when popularity really started to gain momentum for these GLP-1 weight loss drugs, shares of the likes of Coca-Cola, PepsiCo, the Hershey Company really got hammered. But I honed in on Coca-Cola, talking about that we have seen this playbook before. And I know countless friends and family that I speak to that are on these GLP-1 drugs, and they haven't changed a thing as it pertains to consuming Coca-Cola products. In addition, management has been preparing for something like this for quite some time, as they have increased the number of offerings they have for zero-calorie beverages. When speaking of Coke and looking more at the dividend, we are talking about dividend royalty, as this is a company that has a dividend yield of 2.8% and a 5-year dividend growth rate of 4%. But more importantly, they have been growing their dividend for more than 60 consecutive years, easily making them a dividend king. Now, if we pull up our dividend calculator, we're really starting to fill this thing out. And for October, let's add in Coca-Cola, who also pays the dividend in the months of January, April, and July. So we're really down to 2 final stocks to have ourselves earning a dividend every single month. And the November dividend stock is going to be Costco, stock ticker COST. Like Walmart, Costco is really not a company that anyone invests in, particularly for the dividend. Both of these companies have very small yields, especially Costco. However, they do offer a special dividend from time to time. Costco operates out of the consumer staples sector, and they have a market cap that's closing in on $400 billion. The stock, though, has had quite the move over the past 12 months, up more than 70%. This stock undoubtedly has had an amazing run for a consumer staple stock the past 12 months. But I also believe this is one of the most expensive stocks within the S&P 500. Costco historically already trades at a very high premium when you look at the average. But right now, shares of Costco are well above even that already high average. In fact, shares of Costco are more expensive than the likes of Nvidia when looking at a PE multiple on a forward-looking basis. As I mentioned, in terms of the dividend, the yield isn't much, but they do pack some serious dividend growth. The company pays an annual dividend of $4.64 per share, which equates to a dividend yield of 0.5%. But they have a 5-year dividend growth rate of 18% and nearly 20 consecutive years of dividend growth. Now let's add Costco to our dividend calculator. As we noted, this is our November dividend paying stock. They also pay their dividends during the month of February, May, and August, in addition to November. And as I mentioned, they also mix in that special dividend from time to time. And that leads us to our final stock, our 12th stock for the month of December, and that's going to be Johnson & Johnson, stock ticker J&J. Consumer staples and healthcare have ruled the day here on today's list, so it's only fitting that we end with a healthcare company, one of the largest and most proud healthcare companies here in the US with J&J. As I mentioned, the company operates out of the healthcare sector. They have a market cap of nearly $400 billion, and over the past 12 months, shares are even. However, they have found some momentum, being up more than 14% just in the past 6 weeks alone. This could mark the return of a very proud U.S. healthcare company that's been dealing with many legal troubles. That's just the name of the game here when it comes to healthcare in the U.S. But hopefully, those are nearing an end for now. But in addition, the company's been going through some major changes as they recently, in the past year or so, spun off their consumer health segment, now left with their largest segment, which is pharmaceuticals, and the other being medical device. This is a company that continues to generate huge amounts of free cash flow, can provide some stability, and the valuation looks quite intriguing. In terms of the dividend, though, again, another dividend king, as they have an annual dividend per share of $4.96 per share, which equates to a dividend yield of 3%. They have a 5-year dividend growth rate of 6% and over 60 consecutive years of dividend growth. And now, if we wrap up this dividend calculator and fill in Johnson & Johnson for the month of December, you can see this is entirely filled out now. You can see 12 stocks, 12 different stocks, and these are the months that they pay at least one dividend. So you could be having yourself a dividend every single month. Down in the comments section below, if you haven't done so yet, let me know how many months do you receive dividends on an annual basis. And also let me know your feedback on these types of videos. I got some questions asking for similar videos to this, so if there's other types of topics that you would like me to cover, this was a fun one for me to do and do some research on, so I hope you enjoyed it, and if you haven't done so yet, I'd appreciate if you hit that like button down below, subscribe to the channel, and we'll see you in the next one. Take care.